Hello, welcome, and let's just take a look at this wild world of rotation we have going on. This is today's action, Wednesday, right as the market closed before Tesla and Google's earnings and Seagate. I'll get to those in just a second. The Q's down 0.25%, Dow off, but the Russell gained 1.2%. The play is still in the Russell. We talked about last week, a mild pullback somewhere in the zone, and we got a little bit of launch. Breadth was pretty positive, actually about 3-to-1 advancers versus decliners in the IWM, the Russell 2000. So this is where we take a breakdown using the person's indicators of each separate index that we trade. We trade the SPY, of course. We trade the Qs. We trade the diamonds. We trade the Russell. So bottom line, we track the performance of the advanced decline and volume. Volume was not phenomenal in the Russell, but it was a reflection of money rotating into small cap, or at least regional banks, and that's what led the Russell up today. Now tomorrow's a whole different ball game. Let's get into a few items. I was asked to share this. This is one of the models it's a like in kind model that we use in our algo room. We have a crude oil, we have an E-mini S&P system strategy. Just real briefly, I'm not cherry picking. This was as you can see, this is live or now, but some of these patterns, it is currently long in position. You can see it was short, blue or green lines connecting the dots from entry to exit. If it was a red line, it would be a loser like this right here. This is a short on the SPY. It got knocked out right at the high. Ouch. And then reinitiated a new short position and exited. And this SPY model is now new long. Performance there, just to give you over period of time data and strategy performance. Here is the performance graph over a 2-year period. It's not done much relative to the Qs, which hit a new equity high over that same period. So obviously, performance summary, the Qs have a little bit better of a profit factor. The profit factor on longs almost two times greater than shorts because the market's been a bull market, right? So buy and hold is a 52% return on account on the strategy, 400%. So using this, the algo system that we created on TradeStation's technology. And what do I mean by that? Briefly, just to get through, we'll talk about edit strategies. What we created was to customize our own strategy. And so basically the Algo 1817 program allows us to, using TradeStation's technology, this is pretty crazy, optimize when is the best time to trade. You can put a start time and an end time. You could trade multiple times during the day. You could actually even function and optimize, should we exit a trade overnight or hold a position? What kind of position sizing models do we use? A stagnant position value. In other words, get me in as many shares as possible as a dollar amount allows, in this case, 100,000. Position risk, get me in as many shares as possible, but I don't want to risk any more than $1,500 per trade. Or position calculated method number 3, 1, 2, 3, is position size with stagnant positions. And for futures, we use 2 lots minimum on crude oil. And that's why you look over here on the ES and you see short 2 contracts, it exits, long 2 contracts, it's exit. You can see 2 lots along the way. It doesn't adjust other than stagnant positions of 2 contracts. Same thing over here with crude oil. Went short here, covered the short, went long, still long in the after hour session. We created this with a trailing stop function, the last conditional change, using a function of ATRs in my last conditional change approach, buy signals with PPS, which same PPS indicator can be found on Thinkorswim, same PPS we use here with TradeStation, buys, sells, high close, low close, and you could break down and optimize what the best risk reward ratio is for longs versus shorts. So it's a very intriguing program and product that we wrote on using the back end using our model, or our code was on the back end of TradeStation technology. And that's how we get these signals that we use and project in our live trading room. All right, so now that we covered that, let's talk about action. The other day or yesterday, last night's video, we talked about possible upside out of Google and looking into out in the August expiration. And this might still work. Google beat top and bottom line. The concept is that we probably should go back up and test that high, if not take out that high. And that was what the meaning of yesterday's video was all about. Today we had Tesla came out and it missed the top line EPS, beat revenues, but still it's down 5-6%. Seagate Technology, that was one that was an interesting one that we had. I didn't give it to you guys because I didn't even look at it until today for our live trading room, but it seemed that there was some pretty decent interest in the 110 strike calls for the August 2nd expiration. Those are going for about $2. And, you know, they're break even, or maybe they'll be a little bit better if we hold up here with a 6% move overnight into tomorrow's open. All right, let's get into the gist of things. Couple things to cover. Target trade I put out last week, I believe it was, still sitting here. It's like, shoot me in the brain. You know, I still like it. It's in a weekly buy. It pulled back to rising MAs. Here are the moving averages of the gold and the blue lines. Volume, just with the rest of the market, there's no volume. So it's hard to really get a gauge out of the participation, except for the monthly long shadows here. It shows that there has been accumulation. So I'm thinking that we are seeing at least some return of retail sales. And it's other than just everyone going to Costco or Walmart. So Target should do fairly well in this environment. You may have seen, and if I didn't, this is the newsletter we put out this week. We put out 2 trades, one to Devon Energy, which we are filled on both sides. Beamer Imaging, I keep talking about that. I'll talk about it later, but there it is. I'm not buying this thing until it gets down to 289. It's a high risk trade. It's kind of a penny stock. NVIDIA invested in them. We made money. I think I give you that disclosure every time. So I'll be patient because it might take a year. It might never happen, but I ain't moving until I see 289. So it's just there as a recommendation on an open order. Fastly, we got filled at 775. It was a little higher today. We escaped death with Comcast, which was down on earnings. Ironically, I didn't think it was that bad. But however, it did sell off. It was down. It ended up down 2%. We're in an okay price, 38.95. Our stop is 35.61. Here's the current positions that we have on right now. And this is probably another one of that's just a pain in the neck is Fortinet. And it just isn't budging. So it's not like it's a bad entry, FTNT, for a position holding. It's just, there's the range. It's been like this forever. So we didn't buy the breakout at 61. We bought a pullback. So for the last couple of weeks, it's done literally nothing. As you can see, it's at 58. We're long from 59.88. It's like no big deal. CMCSA, Comcast. Let's take a look at Comcast today. Opens trades lower, nowhere near our stop. Long shadows, big volume. Didn't really see any negative volume today. In fact, volume improved. So Comcast with a 3% dividend yield, how much income are they going to take and generate revenue in an election year, which since they own Universal Studios, and that was the segment that lost money, was the movie aspect. They own NBC, CNBC, of course, is their Comcast is the parent company. And so with all of that said, I'm expecting Peacock, a lot of advertisement revenue coming their way, specifically since the Kamala Harris presidential run now has acquired, I believe, over $100 million in a weekend or over the last couple of days in donations. So that money is going to be earmarked for campaign ad revenue is going to be spread amongst the network. So anyway, I still like Comcast from the sense of its Xfinity. It's a long-term holding. It's not something that's fast money that you're going to make overnight. Looking ahead, my 2 cents, I'm kind of a fan of a few names in software enterprises. Some of the names that I like, which is interesting, we're going to go into high closed dojis. One, as a disclosure, we have a small position in MongoDB. And MongoDB, I believe, if I go back, I did my preliminary, was also today. MongoDB should be somewhere in here. And let's double check. We'll go through alphabetically. And there it is, MongoDB. I was right. Okay, so MongoDB had a small what we call a mini high close doji pattern. After indecision, it has a close. Volume uptick slightly on my momentum indicator, and relative strength is, well, it's weakening, but it's still positive. In other words, it's not the beginning of a breakout. It's kind of still holding, and that might be explained because the stock's actually in a range, in the middle of the range at that. Weekly analysis shows that it's still positive. It had one hellacious breakdown. Maybe you could catch a little bit of this tomorrow if it doesn't gap specifically higher, but watch it for the first 15, 20 minutes in the open. If it opens, as long as it maintains, say, 250 support, that's a really good thing. The other one that I like is, again, maybe not so positive as far as the momentum of the follow through, but this was Snowflake, which had a high close doji, and it did have follow through with a higher high, higher low. Volume wasn't fantastic. So again, there's certain applications sector stocks that I think in data stores that might do well. Everyone prefers Salesforce, but there are other names out there. Others like AppLoving, which is a software for marketers. Twillo, TWLO, is another software that uses for a lot of call centers. Kind of a big move today, 3.5%. But here's a stock that, if you take a look at the history on the monthly chart, and literally it's gone nowhere for 2 years or so, a little bit more than 2 years. It's been just stuck sideways in a grind. So again, it's not one that I don't think this is a developed trend yet again. And it's probably a short-term momentum play, top end 64, and then follow it after that. So those are some names that I think you can focus on in the technology space that I think have some, at this point, low risk. If you take a look at the financials, all of these things, it wasn't just Morgan Stanley with a high close doji that ended today. It was a lot of different companies, small cap, Rocket Mortgage, for example, a little buy setup right there. These are interest rate sensitive names, not so much Morgan Stanley, but the financials. Interest rate sensitive that the market right now is prognosticating that the Fed's going to lower rates, right? So Rocket Mortgage would benefit from more applications. Home sales and existing home sales were non-existent. A lot of deals were canceled. Kind of gives maybe the Fed a tap on the shoulder. Hey, numbnuts, let's cut the rates a little bit and get some things moving. We've got, again, commercial property REITs with BXP, Boston Properties. And my bad on that. I went as a fat finger. BXP, Boston Properties. REITs have had an upside move over the last couple of weeks. Nothing to write home about. They just haven't broken out. But I do think that the more we get into economic numbers and the more we listen to a lot of corporate earnings reports, the more we get a better tell on both the condition of consumers as well as what the economy is doing. And so for two things that I would point out, interest rates, if we do see, and that's why the Russell is all of a sudden seeing that upside movement, is because of regional banks, Zion, Truist, TFC, all this sectors rising on better than expected earnings reports. Plus, it's a double whammy. If the Fed lowers rates, it might entice people to be able to afford a mortgage in the housing of where costs are right now. So that's why we are starting to see that, or had started to see the move. But as you can see, if someone says, look, Boston Property rallied, it's too rich, you say, really? I mean, this was a stock that in April of 22 was $131. It's $70 right now. I mean, just a couple of weeks ago, it was 55, 57. So it's not really gone anywhere, right? So we had a mild pullback, and so maybe it's going to go into consolidation phase. We haven't really seen that breakout. So don't get too trapped in that. So for this particular week and for the rest of the week, we got ServiceNow to figure out, Chipotle Mexican Grill. I like CVNA, not Carvana, sorry about that, CAVA, Cava. Cava has a high close doji. Cava is a new specialty type of restaurant food chain that features, I believe, Mediterranean falafels, for example, I think is one of the things on the menu. I haven't seen one. I've heard about the stock. It's pulled back. And I think that in this case, the owner or co-founder was a co-founder of Chipotle Mexican Grill. So it's got some popularity, might see some upside based on this small little chart pattern, which did come at an improved volume reading. And so therefore for tomorrow, coming in. If you don't want to have a lot of heavy exposure to possible earnings risks of big trades, those are some of the names to focus in on. And I'll give you some more names as the week goes. But Target, TGG, still an active trade, still made the recommendation. It's holding in. Just got to get some chutzpah and get some upside going. We had a really wild move, and I don't know why in the at least in the biotech name, and this is a name to focus in on. It's a highly profitable stock. It's called Repligen, RGEN, the biotech. But it's had a breakout, a pullback, a gap higher today, and then sells off. So I'm not quite sure. There was no news that I heard distinctly about them, but it is one to put on your radar screen because, I mean, this is a stock over time that has had some pretty wild swings. And I just want to point out, it's at the low end of a base of a range since the 2020. And maybe it's it captures the imagination that under a Trump administration, when there will be less regulatory restrictions with the FDA and maybe things will free up a little bit. I have no idea. I can just point out to you that it's pretty wild, and we're establishing a position if we can get back into the middle of the range, somewhere around the 125 is a fair value price for this. We don't want to see, obviously, weekly closes under 116. So with that said, I hope that this week I wanted to give out some at least better opportunities for taking advantage of our current positions, give you share some of that, as well as taking a gander at what we're looking for. I'll come back in tomorrow, Wednesday, and we'll do a video update and try to prepare you guys for a couple stocks that are happening. AbbVie, Royal Caribbean before the open on Thursday, and then we'll take a look at what earnings already took place, like follow up with Google, as I still see some potential for upside in Google. Don't forget Comcast. Don't kick that one down and out. 3% dividend yield. I mean, it's better. It's not quite the same as having money in the bank, earning 5% on the T-bill, but you also have a principal appreciation potential in Comcast. That's all I got for tonight, and I'm sorry it's not like something that we could sink our teeth into to an amazing trade. But let's take a look at Goog real quick and finish up. The volume action wasn't fantastic for a rip for this week, but at the very least, if Google can muster a little bit of strength after the PCE number this Friday, the options we were talking about for the August 2nd and August 16th expiration, we might have that shot of a retest of the highs and then take out and test that 200. So that would be consistent with Google beating earnings, but the market being a little apprehensive because of economic numbers coming forward. That's all I got for tonight, gang. I will see you tomorrow. And once again, I will, if you have questions on the algo, I will always answer those questions. We are quite transparent with the strategies, the systems. We project these in the live trading room. In fact, there is the exact page for the live trading room is this right here. Right here. This is what people see day in and day out in the live trading room. So the ES model takes trades 24 hours, and it just, if it's a green dash line, it connects the dot and it does this live. Like, for example, it just went short 2 positions right here. And, if it's a loser, it gets stopped out. It has automatic trailing stop functions in it. And this is part of the algo room that we use in our live trading room. We have the Qs and we have the SPY as well as crude oil. So this is what exactly everyone can't see the chart and when it hits, it lights up right here in this little Excel space here called the strategy position tab. So the columns right here shows you what the product is, what the position is, where it got in, what time it got in, what the last price is, and then P&L. So it's a very transparent way that we've created our room so that I don't have to talk all the time, because God knows I don't think anyone could stand my voice for 24 hours a day, let alone my side jokes. But in the meantime, this is the main room, which we cover stocks and options, and that's what we do in the live trade room. Thanks a lot. If you like what you have to see here and you want more information, put a comment in the box below, and I'll do my best to answer that as soon as possible. Otherwise, if you like what you see, as always, a thumbs up is always appreciative. Thanks, everybody. Have a great evening.